Got a special edition of Market Hunter Thursday with Herve. It's the beginning of the year. We are putting 2020 behind us. We are looking forward, folks, to 2021. Specifically, what we want to go over today is how I'm thinking about top 5 cities to invest in from a multifamily perspective in 2021. You're going to see a lot of these top 5, top 10, top 20 lists over the next few weeks, and they're going to be variants of each other. There's going to be different factors that drive those top lists and things like that. I'm going to go specifically into ours. You guys know as a backdrop that we focus pretty much on C-type assets, value add, turnaround, and we go ahead and we reposition to B plus assets, and we focus specifically on secondary and tertiary markets because we believe that's where we can generate the best value for our investors. We're going to see industries really start to come back to life that were really adversely affected by the pandemic last year. When you start talking about restaurants, hospitality, accommodation, even when you start talking about construction and retail, shopping malls were complete ghost towns in 2020. So that's why I'm so pumped up. I'm so bullish for the commercial real estate market going into 2021. When you think about geography wise, before going directly into the cities, we're going to continue to believe that the best opportunities for investors are going to be in the Midwest and the Southeast to outperform and give you outsized investment opportunities because a lot of the migration going into those areas, specifically folks in the Northeast, such as states as mine, New Jersey, as well as New York, Connecticut, and so on and so forth. So folks, let's go ahead and dive in. All right, top 5 cities, no particular order. We're going to kick off with Jacksonville, Florida, right down south. You'd be surprised that over the past couple of years, Jacksonville has had 55% more people move into their city versus out of their city. That's the 4th highest in the country. A lot of folks will also be surprised that Jacksonville, believe it or not, is actually the largest city in the state of Florida, with a population over 920,000, and that growth rate is about 1.5% to 2% per year. What makes the city very attractive for multifamily investors is that the median value of a home is about $202,000 in Jacksonville. That's 36 times higher than the median value for rent, which is $1,024. When you put that against a median income of $35,000, it makes sense that people are more attracted to renting versus buying specifically in that area. And obviously, we're not talking about the coast of Jacksonville. We're talking about a little bit more inland. On industry diversification in Jacksonville, even though they do sit right on the water, another magnet that drives people into the area is job diversification into the area. It's made up of industries such as healthcare, retail, finance, hotel, education, and construction, with no one industry representing more than 15% of the total job market in that area. So these are the 4 factors in which I'm going to be bracketing my top 5 picks when you start talking about migration, population, median rents and home values, and then lastly, industry diversification. My number 4 city in the same sunshine state, Tampa, Florida, right? Okay, on the northwest side. So Tampa, Florida, again, on a migration standpoint, when it comes to Tampa, they rank 5th in the country with a total net migration of nearly 42,000 new residents, or 115 people moving into Tampa every day. Better move over. Folks are moving into Tampa. That came in just behind Atlanta. On population, Tampa is the 3rd largest city in Florida behind Jacksonville and Miami, with a population of 414,000. So good number of folks there for tenant size for your multifamily investment. Median rents, median income, the value of a home in Tampa, a little more than $215,000. Rent is right around $1,100 on a median rent size. So similar to Jacksonville, it does make it expensive to purchase single family homes in Tampa. And on top of that, you got median income of $36,000. So you're going to have a good base of renters that live in Tampa. You've got nice migration and population coming into Tampa. Number 3, we're going to go down to big state Texas, specifically San Antonio, Texas. Between 2010 and 2019, San Antonio had a net migration of 260,000 people. That puts their population right now the second largest city in Texas. I bet you guys didn't know that, with a population 1.6 million people. They are experiencing a high birth rate, a low death rate. Again, like what I said about migration, so many folks moving in, not only from the East Coast, specifically from the West Coast. Again, median value of a home in San Antonio about 160,000, where the median rent is a little more than 1,200. So home ownership in San Antonio a little bit more affordable than in Jacksonville and in Tampa, which makes it even more attractive place for folks to move in. You do have median income in San Antonio of $34,000. So specifically for San Antonio, I'd recommend investors really focus on type C properties that could be repositioned up to a B plus, because it could be difficult to be finding tenants there that qualify for the typical 3 times rent based on income levels, especially since the median income is $34,000. But again, that just tells you that half of the population in San Antonio, it makes over $34,000. The other half makes less than $34,000, right? City number 2 on the list, Huntsville, Alabama. I don't know why when I talk about southern cities, I got to use a southern accent. I think it just kind of goes with the flow, right? I mean, you start thinking barbecues and just big things. But Huntsville, Alabama, city number 2. They rank first in their state on net migration, over 6,000 folks between 2018 and 2019. Huntsville has a population just over 200,000. That's been growing about 1.5% each year for the past 9 years. So consistent population growth, a metric that we really like to see in Huntsville, Alabama. Huntsville has a very high median income. A lot of folks will be surprised about that. Why? Because you have a lot of high-tech science and engineering and research jobs in Huntsville. You have a lot of employees down there for NASA. Median value for a home in Huntsville is just under $200,000. But guess what? Median rent is $800. So home ownership a little bit more affordable in Huntsville. And again, that median income of $54,000. Again, that compares, let's say, to a San Antonio of $34,000. And again, because of the concentration of high-tech jobs. All that being said, however, no one industry makes up more than 15% of the total jobs in Huntsville. Those industries are professional jobs, like I was saying, the engineering, healthcare, retail, manufacturing, public service, and accommodation. And the number 1 city coming out of Market Hunter Thursdays with Herve. And I might be a little bit biased here because this is from my original hometown, at least where I went to high school, Baltimore, Maryland. I know you guys are shocked. It's not South. I didn't say it with a Southern accent because it's not South, although it's weird because folks way up north really believe that Maryland is a Southern state, but folks in Maryland think that Maryland's kind of a mid-Atlantic state because we sit right there on the Mason-Dixon line. But Baltimore, Maryland, and specifically, I would say the outskirts of Baltimore, Maryland. Since 2010, the population of Baltimore has increased 3%. It is a little bit slower than the national average, but it's steady population growth year over year. You have good population of Baltimore, over 700,000. You have median rent. The home values are 18% above the median home value nationwide. The average rents are about $1,500 a month, which is less than 1% of the median home values of $160,000. So you got a nice price to rent ratio in Baltimore that gives you an idea that the real estate market over there has a better opportunity for cash flow. From an industry diversification, again, no one industry making more than 15% of total revenues, but Johns Hopkins is the largest employer in Baltimore, as healthcare represents close to 20%. So yes, close to 20% of total industry jobs. Other industries are educational, retail, professional services. So as a recap, folks, my top 5 cities: Jacksonville, Tampa, San Antonio, Texas, Huntsville, Alabama, and lastly, Baltimore, Maryland. I think that, again, if you approach your investing just to give yourself a little bit of hedge, give yourself a little bit of cushion, in particularly targeting the C-type assets in those respective cities where you get a great contractor, you get a great property manager that's going to help you reposition that asset to a B plus asset, you're going to get some nice cash flow. None of these cities that I mentioned are cities in which you're going to be pursuing an appreciation strategy for your multifamily. You're going to be targeting a cash flow strategy. That's the number one way we believe to go ahead and make money in multifamily. Steady Eddie cash flow growth. Take benefits of the population growth, migration into the cities. Take a look at the median income, median home values, and median rents of those cities. And then lastly, industry diversification. We don't like investing in cities in which one or two industries is the dominant job filler for that particular city, which is why we stay away from cities such as Orlando and Las Vegas. So folks, listen, I'm going to leave it there. That's a lot. Definitely go and work, go and chew on it. I wish you guys nothing but great, happy, healthy new year, and have a lot of fun investing. We're going to be back. We're going to be back with more information, with more research, with more data to support these cities that we just told you about in regards to our top 5, specifically in regards to maybe a next segment. How do you go and target some of these commercial brokers in these 5 cities that we talked about? There are a bunch of other good cities that you can add on to this list. This is just some of what of our research have poked out. Again, leave us a comment below. Please subscribe to our YouTube channel. If you have any questions, reach out. I wish you guys nothing but the best, healthy, successful, safe investing this year. This is Herve Francois, Market Hunter, out. Take care.